The indices down more than 10, and the biggest technology companies down 20 or 30%. Yet this company has managed to top the S&P 500 in performance this year, despite a rough 45% drop from last year. We're talking about CVS Health, which is already up 58% this year, easily leaving all of its competition in the most prestigious index on the planet behind. The giant colossus, which operates pharmacies in North America, continues to struggle with the problems that have weighed down its share price in recent years. But now it looks like it is getting back on its feet. What opportunities does it harbor? What was behind those declines? And how far can the stock go this year? CVS Health is finally getting back on track after a challenging 2024. After 3 quarters of disappointing results that brought the company to its knees and dragged down its stock price by more than 40%, there are signs of a possible turnaround. The company's latest quarterly results, announced yesterday before the stock market opened, far exceeded expectations, and the outlook for 2025 looks at least stable. As a result, CVS stock has added over 58% since the beginning of the year, in sharp contrast to its major competitors. Walgreens stock, for example, has gained just under 18%. United Health Group, after very poor numbers and outlook released 2 weeks ago, has broken support at $440 per share, above which it has held since 2021, and has written down over 31% to date. This moves them to their lowest since late 2021. This is the biggest drop for the company's stock since December, when it tragically lost its CEO. Cigna has also lagged, but its shares are up 23% this year. Overall then, the healthcare sector has done very well this year, unlike other market segments. The ETF that tracks the sector is down only 1.4% year-to-date, a significantly better performance than the S&P 500, which has been off 4% since January. If you want to know more about this sector, check out our recent video, where we took an in-depth look at the entire healthcare segment and revealed which super investors were getting in at the end of last year. It's worth following 𝗕𝗂𝗶ecie, because it will give you the top information from the world of stock markets, so subscribe so you don't miss anything else. Now back to the results. Earnings per share were $2.25 versus the expected $1.70. Revenue also managed to beat estimates. It was $94.59 versus the expected $93.64 billion. However, the company revised its GAAP diluted earnings per share guidance lower to include costs related to litigation involving its pharmacy services provider subsidiary Omnicare. A jury this week found Omnicare liable for dispensing drugs without valid prescriptions to the elderly and disabled in nursing home and long-term care facilities. CVS intends to appeal. The company also failed to provide an estimate of revenue for this year. In the past, higher healthcare costs at its insurance division, Aetna, have been a major issue. Into that came pressure on drug reimbursements, regulatory restrictions, and intense competition. The company has missed earnings expectations 3 times in a row and had to lower its annual outlook. This took a heavy toll on investor confidence. Even today, the chips are not yet down. Healthcare spending eased in the 4th quarter, and the outlook for 2025 remains conservative, but better than expected. Our analyst team focused on Aetna, which plays a key role in the company's overall strategy. One of the key moves has been the restructuring of insurance plans. The firm has discontinued some unprofitable programs in 2024 and raised premiums this year, reducing the number of insureds but improving margins. The goal is to get margins in Medicare Advantage back to 3 to 5%, but it was still in the negative range of -4.5% to -5% at the end of 2024, according to CVS CFO 𝗕𝗂𝗶ecie. Healthcare costs remain hard to predict, but this time, the company has accounted for them in its outlook. For 2025, it has set its earnings forecast at between $6.2 and $6.2 per share, up from an earlier range of $5.75 to $6 per share. One of the key factors that gives CVS a competitive advantage is its unique business model. The company owns Aetna, a health insurance company, an extensive network of retail pharmacies, and Caremark, a pharmacy benefit manager. This trinity creates a synergy that competitors like Walgreens, which focuses primarily on pharmacies, simply don't have. Finding similar companies with competitive advantages has never been easier. With the fair price index on 𝗕𝗂𝗶ecie, You get access to thousands of calculated fair values based on DCF and relative valuations, along with other data in the detail of each company, giving you all the data you need to price stocks like a pro. So be sure to check it out. You'll find the link in the video description. Caremark plays a key role, dealing directly with drug manufacturers, arranging discounts, creating lists of covered products, and brokering payments between insurers and pharmacies. In practice, this means it can direct patients to CVS pharmacies, increasing their sales and market share. But the CVS Health story is more complex. The company is now entering a pivotal phase. If it can improve margins in the insurance business, stabilize healthcare costs, and take full advantage of synergies between parts of its business, it can get back on a growth trajectory. Of course, a number of risks remain: macroeconomic uncertainty, regulatory pressure, and most importantly, the unpredictability of healthcare costs. But even in this challenging environment, stocks are beating not only the indices, but also the big tech giants. Since the 2015 peak, the stock has traded CICE lower by 38%. But the current setup and a possible revival in the company's business could help the stock further. Investors are at least counting on it, and it's no coincidence that CVS Health is the best performing stock in the entire S&P 500 so far. There's a new video coming out on Monday, so be sure to subscribe so you don't miss it. Have you hit investing in this or any other company in the healthcare sector, or do you prefer to avoid it altogether? Come chat with investors on 𝗕𝗂𝗶𝚀. Want to chat about stocks but don't have anyone to talk to? Just head over to 𝗕𝗂𝗶𝚀, where you'll find a community of thousands of investors discussing stocks and market events every day. Join in, ask questions, stay in the know. You'll find a link to the platform in the video caption, so check it out. Happy investing. God luck with you investments.